Good morning, everybody. It's Brian. Hope you're doing well today. It is Monday, 27th? Yeah, 27th of July. Just here to do a quick update for the morning. Back from vacation. So last week we didn't do any updates at all. Was out enjoying some time at the beach. And back now, so we're going to get back to it, have a look at what the market is offering to us this morning, see what opportunities are out there, which directions we might want to be trading, and go from there. We're going to start with having a quick look at the forex market, which that's different from how we trade other markets. So we're going to have a quick look at forex, see what opportunities might exist with currencies that are, looking at each individual currency, finding out which currencies are actually moving, and then we'll see if we can pair those together for potential tradable opportunity this morning. Then we'll move over to the futures market, have a look at the S&P, oil, gold, and then a quick glance at crypto. So let's go ahead and jump over to it. I guess first things first, before we even look at that, there's some, this week, we don't have a ton of news coming up this week, but we do have some coming up. Really, it's today, tomorrow, pretty light as far as what we're looking at during the U.S. session while we're trading here. But Wednesday could be a big news day for us. We've got pending home sales followed by the FOMC statement and press conference. So that could certainly be an interesting day. Remember, a lot of times, we need a catalyst, something to happen in the market for, going to look for, big directional changes or potential opportunity for changes, and that could certainly be pending home sales is kind of a leading indicator. FOMC obviously is a huge, could be a huge catalyst for something to occur in the marketplace. Doesn't mean anything will happen. We're just saying potentially, something could happen around those announcements. So be aware as we come up to those, and be aware the market can sometimes act a bit differently and even a bit flat leading into, especially into FOMC, as we try to kind of, market makers try to pick apart what's being said and how that might impact the future. So anyway, with that said, let's go ahead and get over to the forex side of things. Today, tomorrow, we don't really have anything out of the gate that we need to worry about that would be a high impact event on us. So we're just going to simply look at the market, look at what's going on. If we have tradable opportunities, we'll go ahead and look at those. So starting things off here, we've got the pound as a strong currency. Pound, just in relation to other currencies, the pound and the euro have both been moving stronger over the past few hours. So we would certainly be looking at the pound as a strong currency, and then trying to find something to pair against it. As far as weak currencies go, we've got the Swissy down here. We've also got a couple of currencies below the midpoint: the USD, the Aussie, the CAD, just kind of peaked below and it's back up to the midpoint here. As far as narrowing it down from there, pound versus the Aussie, it's moved 90 pips for the day so far. Averages, in that 140 to 150 range. So, potential opportunity there on the pound versus the odd. Of course, the Aussie is not actively traded right now. Remember we talked before about trading items and whether that's looking in forex or anything else, futures market, so on and so forth. There's going to be times when instruments are more heavily traded than others. The Aussie more heavily traded during the Australasian session and even into the European session than it is during the US session. Does that mean it can't move? No, absolutely not. It could certainly have some pretty big swings just based on whatever's happening with the pound. But are there other currency opportunities that might be better based on currencies that are being actively traded right now? So then that brings us over to the pound. Well, what's the pound USD look like? Well, pound USD, that's moved 104 pips on an average of about 100 to 105. So, potential for opportunity there, maybe not as great as in others. So we'll move that one back. What about the pound versus the CAD? The CAD's been kind of flat, just peaked below the midpoint here. What's going on with the pound CAD? Well, that one's moved 77 pips on an average of about anywhere from 100 to 120. So, that could certainly be a little more opportunity there. The trend for today is long. So, looking at this, if the pound continued to push to strength against our other currencies, and the CAD stays kind of level or even below the midpoint, that could certainly be an opportunity that would help propel us into some potentially could keep pushing this current currency pairing in that same direction it's already been moving. So what we could do here is go ahead and just place an order at the top of that breakout box, and if we get some momentum and it pushes us through the top of the box, then we'd be in a trade, and that would allow us to continue on with the direction of the trend, and with the current market sentiment, and gives us an opportunity to say, hey, we've got things that are lining up. It's not quite as great as it could be. I'd like to see a weak currency a little bit weaker, but it is what it is. So we could go ahead and place that order there, and if it fills it, great, and if it doesn't, that's fine too. Maybe things just turn around from here and it goes back down. Next couple hours, it never breaks through the top of that box. If that's the case, that's the case, and we don't worry about it. But so I'll go ahead and put that on up here, and just based on what we're seeing with pound diverging from the CAD, pound moving to strength, CAD moving to weakness. Not as great, like I said, as we could be. That CAD could certainly be a lot better and more below that midpoint. But it is decent divergence from one another. And if it does move and break through there, hopefully that momentum can carry us on that extra 20 pips or so that it would need to move in order to take profit on it. So we'll let that one work and see what happens there. Like I said, if it doesn't fill, if we don't get that burst of momentum, here in the next hour as we get to the end of that breakout box, I'm just going to shut the trade down and not take that trade. By the way, we've got to have a window of opportunity in which we're going to operate. And again, that goes for forex or anything else. There's times, and you can look at your volume detail on just about anything that you're trading and see what times of day that instrument is more active. You want to trade during times when you've got activity historically, right? That's going to give you the most volatility and that best opportunity for movement, right? So look at that. Sometimes you get these big movements in really light volume times, but what that can be driven by is just simply a large order coming in and consuming the small number of limit orders that happen to be existing at that time. So it's not really a move driven by kind of the crowd or the masses, and those have an opportunity, or not an opportunity, everything has the opportunity. Those have a tendency, is the word I'm looking for, to sometimes move back very quickly too, because they're being traded during times when you don't have as much activity there. So anyway, let's move on and pop over here to this guy. All right, this screen. All right, so over here, I'm just looking at the S&P, crude, gold. What are we doing? Where are we trading from? Looks like we're pretty much back to where we left off on before I left for vacation. So had a big move up on last Monday, and a big move down Thursday and Friday, it looks like. So kind of back to where we were when I left, struggling around this 32.20, 32.18, 32.20 area. The 4-hour trend is still long. We've been moving up since March. been in this steady upward trend. So the 4-hour, the bias is long. 30-minute, the bias is short. So we've got a conflicting bias between the 4-hour and the 30-minute. What does that tell us? Well, for me, it says, hey, we don't really have any tradable opportunities, because what we're watching for is we're watching for confirmed bias. So if our 4-hour bias is long, we'd want our 30-minute bias to be long, and then we could look for long trading opportunities. Maybe you're trading on different time frames though, and maybe you're looking at 30-minute bias and a 5-minute, and you're trading on a 5 or a 1. You'd want them both to be short. Even that's mixed though right now. So even if you try to go shorter, you're still looking at a mixed bias. So it looks like this morning, leading things off today on Monday morning, we're just gonna step away from this and not look for trades until we get something that is in agreement between, for our trade setup. So don't force it. This is a good opportunity to talk about that. It's really easy when you get these, it's a new week, it's a brand new day and a brand new week, and we're excited. We've just come off the weekend, or maybe just come off a holiday, and we're like, okay, I'm ready to go. Let's do something. Let's get in the action. And you want to just jump in. You want to take a trade because we're traders and we need to trade. But remember, and I say this a lot, it's not about pushing the button. It's about following the process. Right? It's all about following the process. And if you have a process that says this needs to happen and this needs to happen, for example, my process says the 4-hour bias needs to align with the 30-minute bias, and then from there, based on whatever that alignment is, I've got a long bias or a short bias. These things have to align, and then from there I can start looking at these opportunities, either around a key level or waiting for the a pullback and a breakout of a previously closed candle, whatever that might be. You've got to follow your process and your setup. It's so much more important than just going out finding a trade. And I liken it to that old saying: if you go looking for trouble, you're going to find trouble. If you go looking for a trade, you're going to find a trade. You can, at any moment, and that's what's so tough about trading, really, honestly, is any moment of any day in any instrument, you can find justification to take a trade. You can justify your way into a trade. The better thing is to wait for the right setup. You've got a setup, you've done your homework, you've taken time out to create a trading plan, you've back tested that plan either through some back testing software, or you've just manually gone through and done kind of a sanity check against what you're looking at from your entry process, and you've said, hey, this works for me, this is going to be my process. Stick to that process. If the process says, hey, you've got a mixed bias, you're not going to trade, don't trade. Maybe you're looking for certain things to occur with Bollinger Bands or RSI or Ichimoku Cloud or whatever it might be. Follow that plan, and if it doesn't line up, you don't trade. It's all about the process, not about pushing the button. All right. So anyway, don't want to be a broken record on that. So for the S&P, I've got nothing. I've got a mixed bias this morning, so I'm going to leave that and move on. Crude, what's happening in crude? We've been struggling in crude. Remember when we left, we were hanging around. We kept hitting our head on 41. That was the top level for us. It kept hitting 41 and retracing, hitting 41 and retracing. Broke through that last week, so now 41's become our new bottom. 41, which was our resistance point, is now our support point. As far as bias goes, the 4-hour bias is long. 30-minute bias was short up until just a moment ago. It's just crossed over, so this 30-minute bias is long as well right now. So as we get closer in, we've still got an hour and 15 minutes for before the U.S. regular trading hours begin. But what would we be looking for? Well, we'd be looking for long trading opportunities. So what does that look like for us? Well, it could be a pullback all the way back down here to 41.40, which was definitely another resistance area. You've also got previous top up here at 41.60. So we could really be watching both of these pull back to 40. Depends on what this does leading up to our as the bell rings later in today. But I'd like to see more of a pullback, I think, back down to 41.40. But 41.60 could certainly be there as well. But we'd be looking for long trading opportunities since our bias is long on both of these. The other way to go is to time it on a shorter time frame down here on a 5 and wait for pullbacks to occur, and then follow your long entry based on a break of a previously closed lower high with a lower low. So, but we've got to wait for that to occur. This could just be off to the races and run, up to 42, which is a new point of resistance for us. But for right now, we certainly want to wait for pullbacks and see if we couldn't get a little better entry rather than chasing that through. So, pullback would be 41.60 at a minimum. 41.40 would probably be better down here. If it does pull back prior to the open, then you can certainly be looking for breakouts, breaking above 41.60. If it breaks through that, then move on. But we've broken that previous high. Yeah, we have. We've broken that previous high over here just now. Just pierced it. So, we don't want to chase the trade either. Just like waiting for your entry. If that entry process lined up and occurred prior to you starting your trading day, that doesn't mean you start going in chasing the market either. You know, oh, everything lined up, everything happened perfectly an hour ago. well, then it happened and you're not part of it. That means wait for the next setup. It's like, you know, if you're surfing, you don't go, oh wow, this great wave just came in, I'm gonna go throw my board in the water and hope to ride the rest of it in just a white slush, right? You know, same thing with the trade. If the trade setup happened an hour ago, you don't start chasing it right now. Wait for the next setup. Be patient. Wait for the next setup. Follow your process. Follow your rules. Okay. So for crude, I think we've beat that one to death. We're looking for it to pull back down. You know, at least 4160, 4140 would be better. If it does pull down to there prior to prior to a little more volume coming in, we'd be looking at that breakout of 4160 as a long area potentially. All right, gold. Gold is off to the races, man. Gold is cracked highs we haven't seen in a long time. So 1940 is a resistance point up here. We hit it. We're repelling off right now. On a 30-minute, we've got some support over here around 1930. Next level down would be 1900. So for gold, same thing. We're definitely in a long bias. We're still in a long bias on gold. Would like to see a pullback in order to get in, or in order to find an entry. We'd rather see it on a pullback. So what we could be watching for here is a pullback down to this 1930, maybe even as low as about 1925. And if we can get there, that'd be great. To look for potential long entries from there. Of course, the way another way to do that is as this makes lower highs and lower lows, would be to set your entry point at the top of that previously closed lower high, with your stop loss down at that previously closed lower low, right? So that last bar. So just follow it down, and then if it breaks from there, you've got tradable opportunities. Of course, just looking at a breakout trade, 1940 would be your point, which is that 4-hour resistance point up here. If it breaks through 1440, that would be the long opportunity on a breakout. But I think we may see a little bit of a pullback here that we could get long from a different little better entry on that. So that's how that would be. As far as trade management, once you're in a trade, how do you manage that trade? A couple different ways. We're looking for profit points that exceed our risk points. So the first thing to figure out is what's your risk. How are you managing risk? I like to do things based on average trade range or even previously closed bars on whatever time frame we're working in, because that way we're basing things instead of just on some arbitrary number that we pull out of the air. We're basing it on something that is quantifiable and is unique to that instrument that we're trading, and is also unique to the trade patterns of the day or of the week or whatever time frame you're on, right? But at least it's something that's quantifiable and unique to that instrument that you're trading. So I really like to base things either average trade range or on previous bars, because that kind of gives you a point of reference for what's realistic for moves, right? As far as targets for profit points, 2 to 1 at a minimum, 3 to 1 probably a little bit better. But you can also certainly manage that stop, trailing it based on something, not just some arbitrary number, but trail your stop in order to be able to take off risk quickly and then lock in profit quickly as well. You can certainly trail that stop, but look at key levels for managing trades and watch. So key levels for managing your trade, but also be sure to base it on something unique to that instrument. So don't if you're trading on a 5-minute, obviously key levels on a 4-hour would be great. But if you're trading on a really short time frame, 1 minute or 5 minute, and you're looking at key levels, on a 4-hour that are literally hundreds of points away, maybe that's not the best for that short time frame. So, manage your intraday trades based on targets unique to the instrument, unique to the time frame that you're trading. All right. So, what else? What else do we need to talk about this morning? Crypto. Crypto's been on a tear, man. Crypto just rocked it the last few days. Both Ethereum and Bitcoin have just cracked through some big levels. Ethereum 300, and 300's been a tough level, and finally broke through up here. Broke it and just hasn't looked back. So, that 300 level on Ethereum has been broken. It was broken, it was retested, and now it's pushing on beyond it. Long bias still for our crypto. So, what would we be watching for tradable opportunity? Well, we'd want to see either a pullback, back to this 300 in order to buy more, or even back down to 285 area. But for right now, we'd be continuing to look for longs. So if you're in that, kind of a buy and hold perspective, you're holding. You've been long for probably a little bit, for quite a few days now. So you'd just be continuing to hold on this one. Bitcoin cracked above 10,000. Another key level, man. Key level, big for Bitcoin. If we come back here, we can see this is pretty much, it got to, I don't know what's going on with my voice right now. I guess out of practice for not talking for a week. 10,360. This is where it hit and reversed this last time. We're coming towards that right now. 10,000 is a big level for Bitcoin. If it can crack it and stay above it for any length of time, we could certainly see continued movement from there. But for right now, there's really no new trades coming into today. We'd want to just hang back and let this thing do what it's going to do. If it does pull back, back down to this 99.90 area, that'd be the spot to look for another potential buying opportunity. All right. So that's it for me for now. Big thing here, as always, stick to your plan, follow the plan. It's all about the process. If you start measuring your results by your outcomes, it's a recipe for disaster, because you get focused on the outcome, and that's what starts a lot of those chain reactions of chasing trades, leaving trades open for too long, violating rules, some moving stop losses because it's got to come back, yada yada yada. Just stick to the rules. If you've done your homework and you've created a process or a system that you're comfortable with, let the system work. And the system can only work if you're consistent with your application of that system. All right. So that's it for now. I'm going to wrap it up. Gonna get back into it today. And if we have tradable opportunities, especially over here on this S&P, we'll come back in and talk about it. It looks like right now this morning there'd have to be a pretty big move long in order for the 30-minute to agree with the 4-hour. So at this point, I'm not expecting much. But if something does happen, we'll record it and talk about it later today. If not, be back tomorrow to do the same planning session. All right, so that's it for now. Have a great day. Bye.